within a cycle high reversal, which we'll go through, or a cycle low reversal, or cycle low retracement reversal, or cycle high retracement reversal, I will look and kind of go for that pattern first. So we'll go through some examples. So these are the 4 basic markets chart patterns that I'm looking for. But if I spot this volatility squeeze within these 4 patterns, that are really kind of focused on those as a potential trade setup. So let's go through and I'll show you what they look like. So the volatility squeeze breakout is based on a pattern which identifies a period of price consolidation. Again, where that price is coiling in a very tight pattern, and then it has an explosive momentum breakout either up or down. So the next question is, okay, which way is it going to break, up or down? So we can use our momentum to help us kind of validate and spot that potential forecast of price movement. But we want to look at multiple time frames, and we see a volatility squeeze covering multiple time frames, then those kind of breakouts are going to be even more powerful with greater fall through, like a kind of chain reaction explosion, or what I sometimes term as lightning in a bottle. So you get a lower time frame, let's say a 30-minute that's in a squeeze, that triggers an hour, the hourly triggers the daily, you know, so you can get a really big kind of tsunami wave of a trend change. So it's this chain reaction that is set off by those lower time frames that can really develop into a powerful price move. And it's great for swing trades and great for day trades, offering you that's what's going to offer that big timing edge. And also in trading, remember, time equals risk. So the longer you're in a trade, the more things that can pop out and happen. So that's the other beauty of, you know, if you can find a compression squeeze to trade, your tendency is to be in the trade a lot less time, and the movements are pretty explosive. So this is kind of basically what the pattern looks like. So you can see, and with the trading tools that I've developed, it'll identify the start of a squeeze with these dots. Okay, so you can see the dots, but you can see this was an Apple 5-minute chart just to kind of illustrate the squeeze. So you can see how it's kind of tight pattern. The price is just going up, going down, just churning. And then what we want to look for is potential breakout direction. So to do that, I'll look at define either a trend line or a horizontal kind of trend line of prior highs or prior lows. And then when those either lows or highs break, that's going to see to, break the momentum, either will break up or down, and that's going to be your breakout of the squeeze. So the next thing is using momentum to give us potential price direction based on momentum. So in this example, you can see the prior highs, or that trend line, was where it broke, and then it had an explosive move up. But the momentum indicators, which I'll show you next, will give us a potential direction as to where that squeeze will trigger either up or down. So here's some really good examples. This is NFLX, just multiple different squeezes on a daily time frame. So again, you can see in this one chart, you can see these dots. They're either, and I've got them color coded. So if they're green, that means momentum's up. If it's kind of that magenta, momentum's down. But you can see here, we've got this very tight squeeze. See the dots there? Very tight price pattern. And then you can see momentum, the oscillator down here, starting to go up. Now I used 2 different momentum measurements. Cycle 1 is a very fast momentum measurement. And then cycle 2 is a slower, but in a little bit different combination of momentum that I use, but it confirms the momentum of cycle 1. So when I first, put the system together with the kind of this fast momentum indicator, it would have a tendency to get you chopped around too much. It'd get in, get out, get in, and get out. So I put together the lower study 2, which is a slower momentum, and this kind of confirms and helps you to stay kind of smooths out this momentum indicator. So then I've got rules based on, the trade setup. But this is what the squeeze looks like. You can see the momentum up, where does it go? Breaks out to the upside. Then it comes back down. In this particular case, again, see the dots there, and then another period of price consolidation. And so you see the momentum here came back off, see it coming back off, and then it just went sideways, no momentum, right? And then we had what we call a cycle reversal. This is the other indicator. It's a really good tool. See that reversal indicator, and then momentum, reversal indicator, then momentum starts building, then it breaks out of that squeeze. Goes up, comes back over, consolidates again. Here's another squeeze. And then what happens, see momentum, how it comes down, price comes down or goes nowhere. Finally, another cycle reversal, momentum starting to kick up, and another break to the upside. So that's what I'm looking for, that kind of combination of the price churning tight squeeze pattern and then the momentum to give potential direction, and then using specific trigger points on price for the actual entry. So that gives you the really good timing edge.